Hey everyone, welcome back to Kissing Sustainability. Great to have you with me again. So this video follows on from the earlier one on electric vehicles. So if you haven't watched that, I suggest you catch up on that video first. But this one is about the cost of ownership of electric vehicles. Now, one of the most common things that I hear after can they do the range is that they cost too much. So just on the range quickly before we get on to cost, you can easily buy electric vehicles now which will do 250 to 300 miles on a charge, and the reality is that most vehicles do 9,000 miles a year, which works out at about 180 miles a week. So for most people in virtually all situations, electric cars work incredibly well, and the infrastructure is getting better and better for those very rare occasions where you do the long journey, which means you need more than your 250 or 300 miles that you can get out of your vehicle. So on to the cost. Do electric vehicles cost more? Well, from an acquisition point of view, buying it first and foremost, well, yes, they do. They have more technology in them, they have a battery in them, and that costs more than buying the equivalent internal combustion engine vehicle. But of course, it's not just about the cost to buy, it's how much it costs you to run over the whole period. And electric vehicles are much cheaper on a service and maintenance perspective because there's just not as much to go wrong. There's kind of 25 moving parts in the drivetrain rather than 1,200, so there's just far less to go wrong in that system, and you use things like the brakes far less because they have regenerative braking where they capture the energy and turn it back into electricity, so there's less to go wrong, and the cost of energy is much lower. In the previous video we discussed how much more energy efficient they are, so it's no surprise that the cost per mile is much lower. If you charge overnight on an electric vehicle tariff, you can typically see rates of about 7.5 pence per kilowatt hour, which will give you about 2 pence per mile for your fuel cost, which compares to about 21 pence a mile for the average diesel car in the UK at current fuel prices. So there is a massive saving on those areas as well. Now, of course, that high cost to buy is a big barrier for many people. So this is where business and lease cars become so important. 57% of the cars sold in the UK are sold into businesses, lease companies, and they then go into the second-hand market, which is where most of us then buy our privately owned cars from. And so there are big incentives for businesses to go electric because we need them to go electric so that then that flows through into the second-hand market and helps us all with those lower costs that I mentioned. And of course, the more second-hand electric cars that are out there, the lower the cost will be for buying them as well. So let's talk about businesses for just a moment. If you buy a company car as a business and then you give it to one of your employees, there are a number of costs. Clearly there's the lease cost of the car, there's the maintenance costs, there's the fuel costs, but there's also tax costs. Both the employer, who has to pay national insurance contributions, which are now just over 15%, 15.05%, and then the employee has to pay tax, and they pay tax at their income tax rate, typically 20% or 40%, on what's called the benefit in kind value of the company car. And that's worked out by taking the list price of the car, multiplying it by a percentage, which is based on the emissions of the vehicle, and then you pay tax on that amount. So if you have a £30,000 car that is at a 30% benefit in kind percentage, which would be about normal for a standard diesel, that's £9,000. And then if you pay 20% on that, you're paying £1,800 a year in tax. If you're a 40% taxpayer, you're paying £3,600 a year in tax. And of course that's tax, so you've got to earn a lot more than that to pay that amount because that's affecting what your take home is. So in our hypothetical £30,000 situation, if you were to buy a £30,000 electric car as a business, you would be having a 2%, yes, 2, not 20, 2% benefit in kind. So the maths on that one is 30,000 times 2%, which is 600, and then you'd be paying 20% of that if you're a 20% taxpayer, so £120 a year, or if you were a 40% taxpayer, £240 a year. Now, obviously, compared to the £1,800 or the £3,600, you are saving an enormous amount of money. Something like £150 a month for the taxpayer in the 20% bracket, and getting on for £300 a month for the 40% taxpayer. So these are huge savings, and the business saves money as well, because when it's paying for the mileage, it's not having to pay the high costs for diesel, it's paying for the electricity costs. It's also not having to pay the same amount of national insurance. And the lease costs are typically not dissimilar, because yes, electric vehicles cost a lot to buy, but they're also worth more at the end of their life, and the cost of the business is the difference between those points. And so there are huge advantages to switching. Typically, in that sort of scenario that I've given you on a £30,000 car, the business could be saving, including all the fuel, if you're doing 10,000 business miles a year, something like £3,800 a year, and the employee is saving the numbers that I've already mentioned. So if you work for a company, own a company, run a company, or a senior manager at a company, or the most junior employer at a company, getting your business to have electric cars as standard is an amazingly good way not only to help the environment and switch people away from diesel and petrol cars, but to save both the business and the employees money as well. And at the moment, with all of the challenges of cost of living, these benefits are really worth having. I hope that's given you some useful information. If you want to know any more specifics, then please drop them in the comments below. Remember to hit the like button, hit subscribe, and until I speak to you next time, keep kissing sustainability.